quarter of financial year 2026 hosted by MK Global. From the top management, we have with us Shri Binod Kumar, MD and CEO, and Shri Ashutosh Chaudhary, Executive Director, Shri Shiv Bajrang Singh, Executive Director, Shri Brajesh Kumar Singh, Executive Director. I request the MD sir to briefly summarize the key highlights from first quarter FY26 results and also provide some strategic direction on growth, margins and asset quality, post which we will have the Q&A session. Over to you, MD sir.
Good afternoon, good evening, ladies and gentlemen. My colleague on the board, Mr. Ashutosh Chaudhary, Mr. Brajesh Kumar Singh, CGMs. We have come out with our first quarterly result for the financial year 25-26. I will say result is in line. So total business has grown QOQ 1.5 by 1.52% from 13.25 to 13.45
Call is now recorded.
trillion. YOY growth is 10.25%. Deposit has grown QOQ 0.97%, YOY 9.26% from 7.44 lakh. Current account has, in fact, CASA, saving current both, has degrown. Current has degrown in QOQ basis by 3.67%. However, YOY growth is 10.70%. Saving fund, again, QOQ, there is some marginal decline of 1.76%, but YOY growth of 3.27%. CASA, YOY growth of 4.23%. At QOQ, there is degrowth of 2.03%. CASA ratio has also, domestic CASA ratio is at 38.97% against, in March it was 40.17%, and CD ratio domestic is at 78.32%. Advance, we have grown from YOY by 11.50% plus from 5.39 to 6.01 trillion. And QOQ also there is a growth of 2.21% from 5.88 to 6.01. RAM has grown by 15.93% YOY, QOQ it is 3.52% and reached to 3.63 trillion. Retail has grown by YOY 16.52% and QOQ 3.83% and reached to 1.24 trillion. Agri has also grown by 16.40% and YOY QOQ 4.75%. MSME also, where we were struggling earlier and in the range of 5 to 6% growth, now we are growing in the range of 14 to 15%. Last quarter also it was 11 to 12%. This quarter it is 14.45% and we reached to 0.95 trillion. RAM share has increased from 64.23 to 65.34. Corporate credit has grown. QOQ basis it has marginally degrown by minus 1.41%. However, YOY there is 1.77% growth. Here I will like to highlight one thing. In NBFC our growth has, our balance has outstanding has come down from 62,000 crore to 56,000 crore. So there is marginal decline in NBFC and some WCDL where we have a very competitive rate. Even on the last date, I allowed some money to be repaid because of the pricing issue. However, having said that, I will like to add in this quarter itself, we have sanctioned total sanction of 27,000 crore. We have sanctioned in this Q1 itself, which was 18,000 in the last in the previous quarter of the financial year FY25. So there is a growth of in our sanction around 50%. So we are on track. There, it was a strategic decision. The net profit grew by YOY 23.69%, QOQ 0.57% and reached to 22,973. Operating profit is at 4,770 with YOY growth of 5.97% and QOQ marginal decline of 4.96%, primarily on account of two factors which will come in the other income also. Around 300 crore there is a degrowth in other income. That is primarily because of two factors. In last quarter, interest on income tax refund we have got around 180 crore and 86 crore we have recovered penal charges, which we recover on half yearly basis. That means September and March. So that amount was not there. So that is the reason. Otherwise, other components are on track. Net interest income YOY basis it has grown by 2.93% to 6,359. However, there is marginal marginal decline from 6,389 to 6,358, only 30 crore. Other income, as I explained, it has degrown from 2,743 QOQ basis to 2,439. But if we see YOY basis, our other income has also grown by 28%. NIM, domestic NIM, it has come down from 3.48 to 3.35. That means there is a decline of 13 basis point. Return on asset, we have given guidance of in the range of around 1.20, but we have been able to maintain 1.34 in this quarter. Return on equity also we have been able to maintain at 20.26, where we have given guidance of around in the range of 19 to 20%. Cost to income ratio has staff expenses, other expenses remained flat. It was 2,700 in March. Now it is 2,612. Other expenses also 1,413 crore, and now it is 1,415. So it is almost flat. Cost to income ratio has slightly gone up from 45.05 to 45.78, but that is not on account of any increase in the cost. That is basically, as I explained earlier, it is on account of some reduction in the other income. PCR ratio is at 98.20%. Credit cost has come down substantially from 0.81 to 0.28. And earning per share has increased to 88.28. Cost of deposit, there is marginal increase from 5.10 to 5.14 because repricing of deposit is yet to happen, which part of that will start from this quarter. Yield on advances, despite 100 basis point passing on the external benchmark linked loan, we have been able to contain the only marginal decline from 8.642 on QOQ basis to 8.58. Gross NPA has come down from 3.77 to 3.01 on YOY basis. That means 76 basis point reduction. And QOQ basis 8 basis point reduction. Net NPA has come down YOY basis from 0.39 to 0.18, 21 basis point reduction. And on YOY basis, QOQ basis 1 basis point reduction from 0.19 to 0.18. Slippage ratio, in the last June it was 1.50, now it is 0.94. For quarter ended March, it was 1.09, and for financial year, it was 1.11. So we have been able to contain slippages. Recovery since September 22, our recovery is more than consistently slippage. This quarter also we have been against a guidance. We have given guidance of 5,500 recovery of between 5,500 to 6,500. We have been able to recover 2,059 in this quarter itself. Out of that, and we have also given guidance of AUC of 2,000 crore, but we have been able to recover around 815 crore already in this quarter itself. SMA, if you see, SMA number has gone up. If SMA 2, if you see particularly, if not entire SMA overall has come down from 13.32% as of June 24 to 7.99 as of June 25. So there is a substantial decrease of around 5.32%. But if you see, SMA 2 has gone up basically because of two PSU accounts, which were in SMA 1, it has come to SMA 2. But now SMA 2, which was more than 5 crore, which was 4,586 as of June end, 30th June. Now it is only 815. And in these accounts, we have government guarantees available. NBFC exposure, I explained, it has come down from 62,000 to 56,000 crore. Sanction also, overall sanction, if I talk of, including all the different segments of different verticals. In last year, it was 60,000. Now this year so far, it is 88,000 crore. In first quarter itself, we have been able to achieve. Capital adequacy ratio is at 17.80%, with CET is at 15.26%. RWA density has slightly come down because of, if you see, our AAA rated exposure has gone up from 49,000 crore to 60,000 crore. And also some reduction because of some reduction in RWA for NBFC. So coming to external benchmark linked loan, it has slightly inched up from 39.06 to 40.46%. But primarily that is because of the jewel loan being classified in retail. So retail loan is necessarily linked to external benchmark. So that is on account of that basically. Coming to the guidance, various guidance we have given deposit in the range of 8 to 10%. It is now 9.26%. Advance we have given guidance of 10 to 12%. It is in the range of 11.50%. CASA, yes, CASA we have given guidance of around 40%, but our endeavor will be to maintain that 40%. This quarter it has come down. Because some money has to flow in, somehow could not. So that is the reason CASA slightly come down to 39% approximately. Our gross NPA guidance less than 3% we will definitely achieve. I mean, maybe we can go even up to 2.5. Net NPA, same range, 0.1, 0.7, 0.65. I mean, we have already provided hardly 1,000 crore is there. So that does not make any difference now. NIM we have given guidance of 3.15 to 3.30. We are at 3.23. So and I'm hopeful that we will be able to maintain the NIM guidance of between 3.15 to 3.30. ROA we have given guidance of 1.20, but we have been able to maintain at 1.34. Credit cost we have given guidance of 1, we are at 0.28. Slippage again we are maintaining less than 1, we will definitely achieve that. And recovery from NCLT we have given guidance of 800, but in this quarter itself we have been able to recover 451 crore from one NCLT account. We don't have much exposure in unsecured or even in MFI NBFC. Our exposure is only 855 crore in MFI NBFC, and that is in all good rated accounts only. And personal loan is at 7,000 crore, so that is not cause of concern there. Also, credit card exposure is also flat at 561, so there is no concern in that. We are focusing on opening saving fund accounts. So we against last year we have been able to open 10.89 lakh account. This quarter Q1 we have been able to open 12.17 lakh. And current account also 0.33 lakh to 0.34 lakh. So these are the numbers. But few initiatives which we have taken, which I will like to share with all of you. CASA, since is a cause of concern, we have taken some initiative on CASA. We have launched 5 new CASA products, like for one we have opened for MSME sector, one also we have opened for women also, one for pensioners also, one for professionals also, and one for Ind Sampurna for salaried accounts also. We have given many benefit in that. So hopefully that will help us in garnering some CASA, and otherwise also we have taken some initiative for CASA, which we will explain subsequently. We have very recently opened 51 branches, which will definitely help in garnering some new CASA business, because new branch on an average give 20 to 25, 30 crore business in a year. So these branches will add further value to us, and this is our 119th year. So we are planning to open 119 branches in this financial year. So 51 we have already opened. So around another 68 we will be opening 69 more branches. So few initiatives we have taken on the digital side. We have launched a lighter version of our Ind Smart app for the transaction only. Ind UPI we have launched. So with the expectation that we will be able to, our customers use our UPI instead of going to another platform. That is the motive behind opening this, launching this app. Then we have also opened MSME business app, so that people can take and loan on their own instead of visiting to the branches. So around 13 digital journey we have launched in MSME, so that will further help in getting the business. Then KCC digital journey, wherever land record is digitized. In these states, we have launched a digital KCC journey. Senior citizen branch, we have opened one senior citizen branch, and let us see how that pans out. We have expectation that we will not CASA, but we will get some good sticky deposit at least in that branch. And we are really providing good services in that branch. We have agentic AI. We have launched it for collection, so that will further help in containing our SMA and slippage. And we are also trying to automate corporate credit assessment. So in our board note, around 10 sections are there. Out of that, 4 sections we have digitized, and remaining we will take in a staggered manner. So these are the few initiatives we have taken. And on digital side, we have taken some initiative, and we are going to take like CRM. We have started, and by September end, I think we will be going ahead with few of the services. We will start in that. Then data lake journey we have started data lake for that, and then in next generation call center we have already floated RFP, and hopefully that will help us in further. Vendor has been onboarded for next gen call center, so that will again help in reducing our customer complaint, improving customer service, and resolution of the complaint. And we can use this for various purposes, like for collection, for digital, for lead generation, lead monitoring, etc. We can use this also. We are also in the process of launching eFRMS new software. So that will again be the revamped version of eFRMS solution. So these are the few initiatives we have taken. Further, we are also planning to revamp our training system entirely, because training system knowledge gap is one thing which I believe is cause of concern for not only customer complaint, that also impacts our business. So we will be, that will take a year or so, but we will be revamping our training center completely. The way training is imparted, basically, it should be very interactive, like quizzes, various small quizzes, presentation, case study, etc. So these curriculum, we will redefine our curriculum completely. So these are the few initiatives we have taken, and Ashutosh, I will request Ashutosh to briefly capture digital.
Yeah, thank you, sir. In the digital journey, I will just capture in the 4 different phases. The first one is the transactions. If you see, our UPI transaction has grown substantially from 2.12 crore per day to 2.82 crore per day. The mobile banking transaction has also improved this quarter, 59 lakhs per month. The rating of our mobile app has substantially increased from 4.1 to 4.4. We have launched 11 digital journey this quarter, means Q1. So taking the total to 132. And if you see, the digital transactions has gone up from 90% to 93% in a year. And the biggest contribution to that is our UPI channel in the digital transaction. In mobile banking, internet banking, and in the card also we have seen good traction. In the mobile banking, after launching of our Ind Smart mobile banking app in last year, we have seen a lot of onboarding in that particular app, which is user friendly. A lot of features are available, hence we have seen a lot of traction in that particular category. If you see the digital business, this particular quarter we have done 57,955 crore, and we are aiming to do 2,25,000 crore of digital business this particular financial year. Most of it will be from the digital asset side. One good thing we have done is that this e-bank guarantee we have started issuing. We are popularizing this. We are handholding our customers. We are imparting knowledge how to use that. That will also help a lot to the bank in non-fund business. if you see the adoption, the digital adoption has gone up substantially, more particularly into the retail side, which was 69% 1 year back. This has improved to 87%. So also the agri business from 90 to 96%, and we are putting good efforts to increase the MSME business, which is at present 78%. With that, it will grow in a good manner. The bank has also onboarded itself in the ULI platform and garnered a business of almost 6,350 crore. So, sir has told a lot of digital initiatives, so I'm not telling all those digital initiatives right now. But one or two things that I will like to tell here. We have launched Employee Assist. So, these particular things will enhance the customer experience because this assist is a chatbot which will immediately provide all the answers related to bank's internal guidelines, process and systems, so which will help the employee of the bank to reply to the customer promptly. So rest sir has told, and one more thing I will like to tell here is that the agentic AI for collection that we have introduced, which is right now in two languages, that is English and Tamil. With the success and with more use cases, we will expand it to other regional languages and Hindi. So that will help us in our collection systems, improve our collection system, and that particular agentic AI system will definitely take it forward for our business cases in the days to come. Thank you, sir.
Thank you, sir. We will now open up the floor for Q&A session. Anybody who wishes to ask a question shall raise their hands. I request the participants to limit their question to 2 per participants. And for further questions, please join back the queue. Anyone who wants to ask a question, please raise your hand. Yeah, Mr. Ajmera, please unmute yourself and ask a question.
Thanks, sir. Vinod Kumar ji, compliments to you, sir, for keeping at least the bottom line at least intact. You are in profit on the net profit front. Many of the banks are finding it difficult, and even the business growth, the credit growth of 2.21% in this quarter is commendable. Overall business also is. So, in spite of so many challenges you have met, you have declared good results, good numbers. And in your presentation, in Ashutosh sir's digital journey presentation, you have almost covered, I think, everybody's 70 to 80% questions or the queries. So there is hardly anything to ask, but yes, there are some couple of questions or some observations and some data points for the future 3 quarters now, because there is you already explained everything in detail. Like one was on SMA 2. And you said that 2 government accounts are already, I think, one of them is already been regularized under SMA 1 or SMA 0. So what is the exact number of that now? Where do we stand now vis-a-vis the June number on SMA 2?
SMA 2, these 2 accounts constitute around 3,300 crore. So total SMA 2 more than 5 crore was 4,586. Yes. So these 2 accounts had come out of SMA 2, and now SMA 2 is for 815 only.
Yeah, so that's a very good encouraging statement from you, because that was the major cause of worry that are we sleeping or having the future NPAs even the NPA.
I don't think these accounts will slip to NPA.
Even the NPA provision in this quarter also is very less, so there is hardly any chance, for any further numbers going, NPA increasing. Now, sir, with this, part of the benefits, or part of rather, I would say the hit of the rate cuts has already been factored in, but still some part is left out of the earlier rate cuts. and now two more rate cuts of 25 bips, so total about 50 bips is also expected in this year also, maybe later half or later part of the year. So where do we, because the NIM today is comfortable at 3.323, but going forward, will you be able to protect that 3.1 or 3.15 with this lag effect as well as the future effect on the, effect of the future rate cuts?
I think we will be able to, because see, from this quarter onwards, a bulk rate has come down by more than 100 basis points. So impact of that will start coming in this quarter. Plus, rate cut has also happened in retail term deposit. So impact of that will also start coming on. In another 3 to 6 months, around my 86,000 crore will reprice. So impact of that will also start coming in. So I am hopeful that I will be maintaining around between 3.15 to 3.30.
That's very good, sir. Sir, you have been giving little conservative targets, goals, and achieving it. That's very good. But looking at the current trend, and with your 88,000 crore of the sanctioned or in pipeline, I think it was 88,000, isn't it? You said.
Yeah, 88,000 we have sanctioned in this quarter.
Is there any chance of upgrading the targets for the credit going to maybe 13-14%, or we will stick to that 10 to 12% only?
As of now, we stick to 10 between. We'll try to be on the higher band of the guidance.
Higher band
of the guidance. Higher band of the guidance will be tried.
Okay. Sir, one last this thing in this round. You had said in the last quarter's meet that you are not encouraging much the co-lending or increasing your book by participation by others, because you are not fully geared up or prepared digitally. Your digital capability is not there to that extent. So whether any change is there now, would you be looking for those kind of arrangements to increase your overall loan book? And secondly, coupled with this, with RBI now relaxing the collaterals, gold collateral for the agri loans of less than 2 lakhs, do you think that some major chunk can go there now when you can accept the collateral and give the loans?
No, actually, what had happened, let me explain you. Co-lending, we are still not in preparedness for our digital platform. So as and when our digital platform is ready, we are not against co-lending. Only technological requirement is there. So as and when we have technological requirement, we can go for co-lending. Number one. Number two, agriculture, what had have this gold loan up to 2 crore they have allowed now to take
2 lakhs.
2 lakhs. If they are willingly providing. So when draft guidelines came, we have already initiated for shifting this gold loan to retail loan. So now at least with this we can further take them as agriculture.
So the last one is on the treasury. Indian Bank is known for making very good treasury profit, good arbitrage even in the foreign currency. So going forward and with the rate cuts already there and further rate cuts coming, do you think that we will make some bumper good profit from the treasury in the remaining 3 quarters?
No, definitely. So even if you see last quarter also, we have from forex arbitrage, you can say we have earned around 158 crore. And treasury profit we will book as per requirement, because say if I sell some of the higher yielding, then again whatever we will purchase that will be low yielding. So we will book profit as per requirement only. Not a very bumper or something like that.
Okay, sir. Thank you. Just if you can tell me any buffer provision which we still have now in our books.
No, see, we have various policies for providing even on standard assets. So we are following that policy. And we are making I may share with you, on SMA 2, we have a policy of providing 10%, which is not required, but we have a policy. So similar, there are various pockets where, as per our policy, we keep on providing.
All right, sir. Thank you and all the best to you, sir. Thank you.
Thank you, Ajmeraji.
Have some meeting here in Mumbai for physical interaction, sir. Also.
Anu will come. First week or second week will come.
Okay.
Thank you, Ji. We'll take next question from Jayant Karoti. Jayant, please unmute yourself.
Am I audible?
Yeah, Jayant, please go ahead. You are
Yes, it's audible.
So the question is on the asset yields. How much of the current rate cut has been passed on? And also, if you could highlight on the MCLR book, how much of the book would be corporate where competitive intensity could sort of drive some repricing decisions for us?
See, MCLR, my MCLR book is 52%, and external benchmark linked is 40.46%. And within MCLR, one year MCLR linked is 41%. So substantial portion of even MCLR is linked to 1 year MCLR. Coming to your question of
Transmission, how much of the current rate?
Transmission. So external benchmark linked is had immediately. We have on the very next day of the rate cut, we have passed on. So on 40% of the book, it has already been passed on. Coming to the MCLR, since cost of deposit has not come down, so although in last 3 months, MCLR has come down by 5 basis points each month. But going forward, only MCLR will start coming down as and when our cost of deposit starts coming down and marginal cost starts coming down.
Sir, the question is on margin trajectory. Would you expect the second quarter margins to take a further hit because of the 2 months that will be left?
Yes, there will be some margin reduction further.
And you're still comfortable with the full year guidance of 3.15 to 3.3?
3.15. I think we will be able to maintain. Unless there is some very aggressive rate cut, then of course then we will have to think. Otherwise, we will be able to.
So last question on the deposit mix. So there is some pressure on deposit growth, and we've seen the CD books of a lot of banks rising. How comfortable are you with the mix of CDs moving up? And if you could also help us understand what is the growth in that book?
No, just let me explain you why my credit deposit growth has not been there. If you see
certificate of deposit.
I mean bulk I am saying, including CD and bulk also. So that book in March was 1.41. And in June it is only 1.45. So only hardly 4,000 crore increase we have taken. So not much of bulk we are not taking very aggressively because that is at a cost.
And are you comfortable growing the bulk book in case retail falls short to fund your growth?
I mean, if no option left and still we are making some margin, we will.
So the question is essentially growth versus margin. You will pick growth over margin?
No, we will strike balance. Like I told in the corporate book, we said around 12,000 crore. So that will depend on what stage, what margin we are getting. That will depend on that. Say we are at times even bulk. At times we get very cheaper. So at that point of time, there is no harm in taking even bulk.
Understood. Thank you, Mr.
Thank you, Jayant. Next question will take from Maruk. Maruk, please unmute yourself.
Hello, sir. Congratulations.
Thank you, Maru.
So, I had a couple of questions. I think Jayant already asked, but just to delve a little deep. So, our margins have fallen by 14 basis points this quarter, right? And next quarter, there will be some impact of the June rate cut, and there will be some amount of MCLR, small amount of MCLR repricing as well. So, given all that, would you say that the quantum of margin decline would reduce in the second quarter, or it could be similar?
No, quantum of margin decline will reduce in the from this quarter onwards, because bulk will also start repricing, and we have also gone for revision of rate in retail term deposit, and also we have gone for some rate rationalization in saving fund. So this quarter from 1st of July. So this quarter onwards, this rate of decline should come down.
Okay, sir, got it. And so, just in terms of retail term deposits, how much would they reprice in one quarter? Because we know all banks have 13 to 15 month maturity, but it may be lumpy in some quarter, not lumpy. So, on a ballpark, what could you say would be the repricing in the second quarter?
So, my retail term deposit is around 2,50,000 crore. 288. So out of that, 86 is repricing in next 3 to 6 months.
86 in next 3 to 6 months. Okay.
3 to 6.
Okay, so very helpful. And just one last question in terms of competition, right? Where do you think private banks are more aggressive relative to PSU banks? For instance, PSU banks have recouped their market share in home loans. So where are private banks really very aggressive in pricing, in which segments?
Very rightly you are saying, but maybe because of their strategy also. Since they have some CD ratio constraint in the past quarter, so maybe, and very openly he came and told we will consolidate. So certain segments like MSME, we are seeing good competition from the private sector banks, and certain export oriented units, there also we are seeing very high competition.
Okay, and in corporate it's largely PSUs only, right? Like say in the A category or AA category, would it be PSUs or private?
Mostly PSUs.
Okay.
And 1 or 2 private banks come, but smaller banks come, but that is for a very small amount.
Got it, sir. Got it. Sir, this is so helpful. Thank you so much.
Thank you. Thank you, Maru.
Thank you, Maru. Next question we'll take from Mona Ketan. Mona, please unmute yourself.
Hello.
Hello.
Yeah, Mona, go ahead.
Hi. Yes. Evening, sir, and congratulations on a good set of numbers. So, firstly, on the bulk deposits, you mentioned about 1.4 lakh crore. What would be the maturity pattern of these deposits between 3 months, 6 months, and so on?
Have data. So this 50% 1 year and 50% below 1 year.
Okay, so 50% will be after 1 year.
50% will be after.
Or at 1 year.
Or at 1 year.
Okay. So in the next.
Normally bulk we are not taking for more than 1 year. In very few circumstances we take for more than 1 year.
Okay. So is it fair to say that in the next 6 months or so, about 50% of this will mature? Is that a fair understanding? Or in the next 9 months that's the case?
No, in 6 months. Because around this quarter itself, 33,000 will reprice. So out of 1,04,000, 33,000 will reprice in this quarter itself.
Okay.
Yeah.
Got it. And so secondly, if I look at your, you've made significant provisions, which is the PCR on your existing NPA, and the trend on, slippages have also moderated. So is it fair to assume that sort of credit costs will settle down between 50 to 70 bips, or what are the risks you're seeing to credit cost, if any?
No. Very rightly you are saying, although we have given guidance of credit cost less than 1, but it will settle somewhere between 50 to 70. Or maybe less than that.
Sure, got it. And also, you've been providing on standard assets. This quarter also you made some additional provisions. So, if I have to look at the outstanding standard provisions, including general restructured and everything, where would it stand?
I think a restructured at sector where smaller loans are there, we have 100% we have made. Restructured we have made 25%. And but we are taking various measures for providing. Like one example I told you, even in SMA book, SMA 2, right, we are making 10% provision. And wherever we see, yes, Mona?
Yeah, no, so please go ahead.
Yeah. So wherever we see some sector also there is some stress, so we take proactive measures.
Right. So if I have to understand the outstanding standard provisions, where would it be? You can tell me X of general and restructured as well, particularly into these accounts, because you've been consistently providing. So just wanted to get the outstanding number.
That number, we'll see. Exactly, I don't remember.
Sure.
We'll see. Yeah.
Got it. And also just finally on the recovery from written off, it looks fairly strong from a Q1 perspective. So anything you want to highlight there that has played out?
No, it is basically on account of one big account has been resolved. Okay. In one account itself, 3,040 has come. So that is because of that. 340, I told 340. Because of that.
Okay, got it. Thanks so much. If you could just come back on that outstanding provisions number, standard provisions, that will be very helpful. Thank you.
Sure.
Thank you, Mona. So before we take the next question, there was one question in the chat which talks about what's the recovery from written off that you expect in second quarter and for the full year. I believe you gave a guidance of about 1,800 to 2,000 odd crores, but I think you already had 450 crores in first quarter. So you want to revise that number? And any color on second quarter, what could be the recovery from written off pool? Additionally, you also talked about that the PSLC, there is some relief which has come from the RBI now. So then you intend to book some PSLC fees in second quarter?
No, so AUC recovery, whatever we have given guidance of 2,000 will not revise because already what account has come, we have already accounted for that. So it has come in this quarter, but in this next quarter also AUC recovery will be in the range of 400 to 500 crore. So and PSLC we have already booked. If you see, we have already booked in this quarter of 258 crore.
Okay. But can that run rate go up now that there is a relief? That's a question.
No, because since that guidelines was applicable from 1st of April, so we have already taken measures and PSLC wherever we have already sold around 1,000 crore PSLC income will come during this year. Out of that, pro rata we have booked 1/4 in this quarter.
Sure. So secondly, your SMA pool, if you look at, and the SMA pool of another bank where they had this government-related agri project. What's happening on that? I believe you also have an exposure to that agri project. Is it stressed? Are you getting timely recoveries? Do after some delay? What's happening over there in that account?
No, we are getting recovery in these accounts. I don't think they will slip. Because with some delay, we are getting recovery.
Okay, so you don't expect any, that account to turn NPA, right?
No.
Government guaranteed also will be provided.
Sure. Next question we'll take from Devendra Kumar. Devendra, please unmute yourself.
Hello.
Yes,
Hello.
Mr. Devendra.
Yeah, please.
Yes, audible.
Okay. Thank you, sir, for giving me opportunity, and thanks for the good set of number even above the guidelines. guidance. Sir, actually, I just want to know what type of initiative are being taken for increasing customer base, like advertisement and other things. We are taking good steps for digital transformation, but those information, how those information are shared with normal public so that they can attract towards bank.
So we are taking various measures, and publicity is one of them. We are making good publicity of our products on various visible platforms. Digital marketing also we are adopting, and apart from that, we have a very strong team of RACs, resource acquisition centers. 100 we have RACs. So their people also go on for marketing, and we have a subsidiary IGSS. So we are using these manpower also for canvassing our liability products and also generating lead for asset products like a home loan, car, vehicle loan, etc. So multi-pronged approach we are taking.
Okay, sir. Thank you. Thank you very much, sir. Thank you.
Thank you.
Thank you, Devendra. We'll take last question from Sushil Choksey. Sushil, please unmute yourself.
Sir, congratulations to Team Indian Bank for excellent result. Sir, my first question is, what is the likely balance between RAM and corporate for the year end? 65-35?
It will be around 65-35.
Sir, what is the average yield which we are getting on RAM today?
RAM average yield. Do we have? Average yield on RAM will share with you. Right now I don't have.
No problem, sir. I'll take it offline. Second thing, sir, most of the bankers in the Q1 Concall are indicating whether it's a murmur on the street or general assumption there will be 2 more rate cuts in the second half. In view of that, what is the outlook on treasury and how are we prepared for if there are 2 more rate cuts on overall business scenario?
So overall business scenario, we have given guidance, we will achieve that. Advance we have given guidance of 10 to 12%, and deposit also we have given 8 to 10%, we will achieve that. I am quite confident in that count. If there are 2 rate cuts, so treasury there will be basically, of course there will be profit booking in treasury. But when we have given guidance of 3.15 to 3.30, we have taken into account 100 basis point rate cut in the year. 75 already happened, and if, as you are saying, another 50 happens, then of course then we will have to think about our NIM strategy. So how we can protect at least whatever guidance we have given. We will have to rework that.
Sir, Indian Bank has taken lots of initiative where digitization, cross-sell, cash management, back office services over the number of years, and bank has done well to transform. Now, this transformation and digital expenditure which we have done, is it likely that as liquidity in the system is increasing, rates have dropped, our CASA can move back to 41-42% in a year and a half?
No, I don't think. CASA moving up will be really a challenge on 2 counts. One, government is also adopting JIT in many states, and this pace of increasing JIT will further increase only. And number 2, if you see people are shifting their saving to other alternates also. So, and this trend I expect will continue. So maintaining even around 40 will be a challenge. I am be very candid with you.
Okay. Sir, now second thing is southern states, specifically where Indian Bank presence is high. There's a lot of re-energizing of the states happening because whether it is China plus one story, GCC, lot of global manufacturing capabilities coming to India. So job creation is happening, which ultimately leads to betterment for banks, whether it's for corporate lending or consumer is concerned. Are we seeing in your sanctions such kind of borrowing demand specifically from new industries?
No, see, the amount of capex expected is not happening, private capex particularly. Public government capex, yes, it is happening, but we are seeing some traction in few of the sectors like renewable energy. Of course, there is good demand in solar also, solar module also. So some traction we are seeing there. Then city gas distribution also, since government is trying to lay down line for the gas distribution, so traction is being seen that in that also. And in PLI sectors also we have seen some traction. But the amount of capex which is private capex which is expected, it is not up to that level. If you see, and one more challenge is that all good rated companies are going to market for raising their resources instead of either CP or bond.
Okay. Sir, second thing is India signed a FTA with UK. Wow, many such more deals will happen. So there is assumption with Bangladesh in turmoil, textile, which is the big center of Tamil Nadu and adjoining states. Similar way, leather is likely to be where Tamil Nadu is a big player. Are we sensing on specifically MSME any demand which is supporting the bank for business growth?
Yeah, so I will reply it like this. There was some stress in textile sector. So now we are seeing sign of revival in that.
So prospects of business for Indian Bank may get better in that segment.
In this sector, yes.
Okay. And sir, any specific digital spend which we are likely to this year, and human resource, as you have taken so many initiatives which will be very important for the bank?
Yes, of course. Our IT spend will be in the range of approximately 1,500 crore for this year also. Last year also it was around 1,400, 300. So it will be in that range. Manpower also, we are around 3,000 fresh hiring will happen in this year. So out of that part will be in a specialized sector, like we are also going for say, cyber security, IT sector, risk management, forex officer. So a specialized hiring will also happen and generalist hiring will also happen.
So you highlighted in your opening remark that you will be opening 119 branches in the 119th year. Very good luck for that. These branches are likely to be more of metro, tier 2 cities or interiors?
See, in few of the sectors, my presence is not much. Like in Mumbai, Gujarat, even Rajasthan, some sectors, they are. If you take Mumbai or Gujarat, they are contributing around almost 35% to GDP. Our presence is only 7%. So in these sectors, we'll open the branches wherever potential is there. It will not be specific to any metro or urban area, but in these sectors, we'll be opening branches.
This will be along with your mid-corporate, large corporate, or it will be all specific branches, more of retail?
No, it will be general branches.
Thank you and good luck for the year. And best wishes to entire management. Yeah, thank you.
Thank you, Sushilji. We will take that as the last question. With this, we come to the end of Indian Bank's post-results conference call for first quarter FY26. I now request the management to give their closing remarks.
We have already discussed everything, but 2-3 things. Asset quality, we are on very right track of the asset quality. Gross NPA, we have given guidance of less than 3, but maybe we will do better than that. Slippage also we will be able to maintain at healthy number. And growth also, we will be around whatever guidance we have given. Our endeavor will be to on the upper band of our guidance. And profit also we will receive steady profit, because I don't believe in one quarter showing very good numbers and then second quarter going down. So our endeavor will be to provide steady growth or a steady decline, wherever decline is there, like gross NPA, net NPA, steady decline we will ensure. Thank you, Anand.
Thank you, sir. We thank the management and we thank all the participants. Have a happy evening. Have a good day. Bye-bye. Thank you.
If you found this video helpful, please like, share and subscribe for latest upcoming videos.